Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning, last day of the month of September, last day of the quarter, market webcast. Okay. Daily chart. The bulls had a chance yesterday to try to break it above the high, the FOMC reaction high up at 36. They didn't get it done. They put together another lower high, and then things started to head down fairly efficiently. So we still have the matching lows down at 07 half. Let's just get right out. You can see, the last thing I want to show you on here is you can see the 9-day that wants to be resistance now. You can see the daily midband below. That's what the deal is, okay? Daily midband is the deal, okay? It's sitting at 29.0560. Here's an hourly chart. So we had all this compression in the beginning of the week, right? The tape was totally annoying. Weekly pivot held once, weekly pivot held twice. You had the attempted breakout after the Fed. They rejected that, did the big move down, the big expansion. One look at daily midband, another look at daily midband. There's your matching lows, right? If there was ever going to be an all clear for the bulls, that's usually it, okay? We spent the majority of yesterday, we were short on the expansion move down. We got long right around 15 for the move up. And we just we rode that most of the day. We got long again 26. It was starting to look like a trend day. When they got up into 32, here's your pre-FOMC price at 27.25. They came back, they tested the pre-FOMC price, and then they gave it up again. Once they gave up 27, there was trouble. There was trouble. So we shorted 23 into the close. Our risk marker has been 24.5 since we put that trade out. And, you know, short 23, now short 24. You can see in the overnight, we did 23.75, 24, 24.25. It just could never engage, certainly could never convert that marker. Where I left off with everybody in the room yesterday was, look, after failing to hold the pre-FOMC price level, okay, we were going to make the bulls prove to us they could get 24.5 back. They didn't prove it. They didn't get it done. That's why we remained short, okay? So what have they done? Pushed it down, brought it back, tested the weekly pivot. Now we have a failure from the weekly pivot. The daily mid-band is now, like I said, a little deeper down at 29.06. What the bears need is a lower low, and they need to close below a lot of this stuff. If they can do that, then you can start to see this market come off a little more. If they can convert the daily mid-band to resistance, then the next place we look over the course of the next week or so would be daily lower band. That's around 28.75. If the bears screw up again, if they can't convert the daily mid-band, then we likely head back up, probably to the area of the new weekly pivot. And that will be early next week, and we'll see what it wants to do. But the key for today is the 24.5 risk marker. They couldn't take it off. The weekly pivot now is resistance, and it really looks like it needs a test of somewhere between 06 and 08 to determine whether these matching lows are the real deal, okay? So everybody have a fantastic day. Have a fantastic weekend. If you trade this stuff and you're not in the room and you'd say, hey, I'd like to have a 24.5 risk marker at 3 in the afternoon to play around with all night, well, come on in. We would love to meet you. It's a great group of people to learn how to trade with, and see if our stuff speaks to you. We will be out with some stuff on social throughout the course of the day, so check that out. Have a great weekend, and until then, trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.